Welcome back to First Move. It wasn't so long ago that only the ultra-rich were able to sink money into tantalizing, higher return investment opportunities outside of what we know as listed stocks and bonds. For example, tech startups, private companies, private credit, even real estate ventures. But a new generation of fintech firms are muscling in now on the action, finding ways to get smaller investors involved. I spoke with Arta Finance's CEO about what's on offer and, of course, the potential risks and rewards.
Haven't you ever felt that the ultra-rich have these special superpowers that most of us don't even know about? Like they have access to financial products that most haven't heard about. Things like alternative investments, or they know about these tax strategies that the rest of us are sort of just about figuring out. What we're doing is essentially taking many of these financial superpowers and using technology and some amount of AI to make them available to many more people around the world.
I like the concept. How wealthy do you have to be to get these services?
So right now, we're open in the US for accredited investors, which essentially means you need to have about $1 million in net assets, or this is more important because a lot of people don't know this, you can just have 200,000 or so in income, and that makes you an accredited investor, and that'll give you access to all the products. But most importantly on Arta, we actually don't have a minimum for people to join the Arta platform, or don't have fees to have them join the platform, so they can actually truly explore all these financial superpowers and see if that works for them.
Okay, so what's the minimum then that somebody can invest?
So the minimums vary by product. I mean, there are certain funds that are available for as low as $2,500. So that's how we're starting. And then different products have different availability and different minimums associated with them.
Okay, so when someone says, okay, I'm going to give you, let's start with $100,000, let's be excitable. How do you choose how to allocate the money? How much is determined by them? How much is determined by your decisions?
So it totally depends on what our member is looking to do. If a member wants to talk to a financial advisor or get our advice, we will sit down with them. However, what we believe at Arta is that we want to put people in control. So we give them essentially all the driving controls that they need to plan exactly where they want to deploy their assets, whether that's in alternative assets, whether that it's in very sophisticated ways of using public markets or other financial tools to further their financial goals.
What differentiates you then versus some other wealth manager perhaps that they could go to?
The biggest thing that you'll find that differentiates us, like if you compare us to sort of the 100-year-old Swiss or the US private banks, you'll find us a lot more digital forward, a lot more engaging, a lot more personalized, obviously much lower cost and more fun to use. If you compare us to sort of startups that are trying to do this, you'll find most of them just solve part of the problem. At Arta, we're trying to provide something that's very comprehensive, that gives you access across a wide variety of different asset classes.
The digital aspect of this, I think, is very important, whether it's a sort of digital private office that somebody's creating on a smaller scale, perhaps, or access to effectively a digital private bank. So hypothetically, I could go on, decide that I want to allocate a piece of money to some form of private equity and do that without ever really having to speak to somebody individually and do it all online. Is that possible?
That's absolutely possible. For someone who wants to just do it automatically on the platform, totally possible. If you want to talk to an expert just to bounce ideas off, you can do that.
Wouldn't just put me into stocks of private equity firms, for example?
No, absolutely not. I mean, you would invest in some of the funds offered by some of the best private equity or private credit or venture capital firms in the world. Of course, if you want to buy or sell stock, you can do that. We also have very sophisticated public market strategies that are automated, that take a lot of inspiration from very sophisticated quant funds, where again, depending on your sophistication, your needs, we can give you something as simple as a robo or something as sophisticated as a min volatility portfolio that uses machine learning and all sorts of fancy stuff.
Okay, so how do you make money and how do I pay for the right to have access at all different levels?
We're a business. We charge based as a percentage of AUM for most products. But we did one interesting experiment, which is we let people pay for one of our products, pay based on performance. So they only pay when the product, their portfolio goes up. And what's interesting is we found almost a third of our users starting to use it. So we think there's some interesting new business models that we could actually bring to market here too, in addition to all these cool products.
Yeah, so you only pay a fee if you make money. What happens if you lose their money? and their capital's not protected.
These are market products, so in many cases you do take risk. However, there's a whole series of products. Like if what you want to do is not take risk, like we have a fantastic portfolio of US Treasury bonds, where instead of leaving your cash in the bank, you can actually put it into US Treasuries, which are as safe as it gets, right? It's the US government after all. And then that yields you great return at a very safe way. So depending on what the user wants, there is the right product for them on the platform. And that's really key, that personalization and being able to get the right product for every single user.
How do we gauge the performance that you're providing to consumers under this sort of very tailored and bespoke environment?
You know, we believe in complete transparency. So for every portfolio, we will show people where it's relevant. Backtests, we'll show them how things are doing so that they can truly decide for themselves if it's working or not. But you know, the proof is in the pudding. And what we've seen now that we've been live for a number of months is people telling us that what they're seeing is they're finding value from a number of things. The platform, they're finding value from the access, and fundamentally their trust is increasing with us because they're seeing that this is something that works for them in a way that is affordable and new and interesting and engaging.